Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning, everyone. It is Tuesday, and we will start with US equities, which marked a dramatic bullish reversal last night, even as tariff-led fears triggered an opening slump. The S&P 500 and the Dow closed 0.6% and 1% higher respectively, while the Nasdaq 100 ended the day nearly flat after being down roughly 2.5% at one point during the session. The recovery was most likely triggered by President Trump saying that reciprocal tariffs due to be revealed in the next 2 days will be lower and in some cases substantially lower. In other markets, the VIX rose for the fourth day. The dollar in the US 10-year yield gained a little. Bitcoin fell. Gold climbed to a new record of $3,133 an ounce on continued haven demand, while oil jumped above $71 a barrel on expectations that the US administration may restrict Russian crude shipments. At home, the rupee rose to its highest level for the year, ending at 85.46. The currency finished 2.4% up for the month, which was its best such performance since November 2018, as it was bolstered by year-end demand and inflows into bonds and domestic stocks. In data, the country's foreign exchange reserves rose by $4.5 billion to $658.8 billion for the week. Talking domestic stocks, and the Nifty finished 73 points lower at 23,519, while the India VIX fell for the fourth day. The NSE 500 small cap and mid cap indexes also ended down. 9 of the 12 NSE sectors fell, with media dropping 2.3% and FMCG gaining 0.6%. Breadth for the NSE 500 was negative, with over 60% of its members finishing in the red. The best and worst performers on the Nifty were Tata Consumer Products, which rose 2.9%, and Wipro, which fell 3.7%, respectively. Technically, the next tactical trend will be dictated by which of 23,402 or 23,869 breaks first. More immediate resistance lies in the 23,640 to 23,760 area, while a daily close below 23,402 will bring the 23,000 zone into focus. Speaking flows now, and provisional data showed that foreigners withdrew 4,350 crores on Friday. The month ended with an inflow of 2,000 crores, which was the first such instance after 5 successive months of outflows that began in October. On to derivatives now, and the Nifty's put-call ratio went from 1.01 to 0.92, while that of the Bank Nifty went from 1 to 0.95. Nifty calls added were greater than the addition that was seen in puts, and implied volatility fell 100 basis points, which meant that on a net basis, people turned bearish. Looking at options concentration for the weekly contract that expires on 3rd April, the trackable range lies between 23,500 and 24,000, with notable additions seen at the same 2 strikes. For the upcoming weekly expiration, near at-the-money calls became cheaper compared to similar distance puts, which means volatility traders were cautious for the upcoming session. Talking net index options activity, foreigners and proprietary traders were bearish, while retail investors were bullish. Elsewhere, foreigners' net shorts and index futures rose by 19,000 contracts to 49,000 contracts in what was the first increase in short positions since March 13th. Looking forward, the GIFT Nifty was up 78 points at 7 a.m. Asian markets were also in the green. US index futures were down on tariff fears. Coming to stocks, Hindalco, Indian Hotels and Policy Bazaar were in horizontal support, while GMDC and HCL Technologies were at horizontal resistance. Bharti Airtel, Apollo Tyres and Mastech were at trendline support, while BEML, DLF and Delivery were at trendline resistance. Speaking market breadth, 53%, 30% and 23% of stocks in the NSE 500 were above their 50, 100 and 200-day averages. That is a wrap on the day's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you, and we will see you tomorrow at the same hour. Good day and take care.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.